Now let us discuss the income tax rates for previous year 23-24 or assessment year 24-25. As you know, for the May 2024 attempt and November 2024 attempt, the previous year that is applicable is 23-24 and assessment year is 24-25. First, we are going to learn the normal tax rates. It means what? Tax rates as per the normal provisions of the Income Tax Act. First, let us start with individual. For an individual, up to 2,50,000, no need to pay the tax. This 2,50,000 is hence called basic exemption limit or the maximum amount not chargeable to tax. Basic exemption limit or maximum amount not chargeable to tax. So up to 2,50,000, no need to pay a tax. Next, if there is a resident individual whose age is 60 years or more, it means what? The resident individual should have completed 60 years of age during the previous year, or his age should be more. In such case, up to 3 lakh rupees, no need to pay any tax. Then, in case of a resident individual whose age is 80 years or more during the previous year, who are also called super senior citizen, they need not pay a tax up to 5 lakh rupees. And I gave you one clarification. If a person is born on or before 1/4/1964, they will be considered as senior citizen. If a person is born on or before 1/4/1994, they will be 1944, they will be considered as super senior citizen. Next, so up to 2,50,000, 3 lakh or 5 lakh, as the case may be, no need to pay the tax. Then above 2,50,000 or 3 lakhs, up to 5 lakhs, 5%, above 5 lakhs, up to 10 lakhs, 20%, no 10% kana, 20%, above 10 lakhs, 30% tax. When it comes to Hindu undivided family, association of person, body of individual and artificial juridical person, above 2,50,000, no tax, above 2 lakh, up to 2,50,000, no tax, above 2,50,000, up to 5 lakhs, 5%, above 5 lakhs, up to 10 lakhs, 20%, and above 10 lakhs, 30% tax. In case of partnership firm, limited liability partnership and local authority, on the entire income, 30% tax. Now, cooperative society. Cooperative society is also association of person. However, the tax rate and the way to tax the cooperative society is different in the Income Tax Act. Hence, we have to follow that special method. In cooperative society, up to 10,000 rupees, 10%, above 10,000, up to 20,000, 20%, above 20,000, 30% tax. Now let's come to company. Company are of two types, domestic and foreign. For a foreign company, 40% tax, and for a domestic company, we have to see what was their turnover in previous year 21-22. If it is up to 400 crores, 25% tax, only 25% tax, and for other domestic companies, 30% tax. Now let's come to surcharge. Surcharge, okay, first and foremost, one point about the tax rate is that the tax rate system is a slab rate system. So every individual, irrespective of their income, will get the benefit of the slab rates. So even if I am earning 2 crores, I will get the benefit of the 2,50,000 slab, 5 lakh slab, 10 lakh slab, etc. Hence it is a slab rate system. Then what is surcharge? Surcharge is a percentage of income tax. So whatever percentage is given, that you should not calculate on income. You have to calculate on income tax. And surcharge, there is no slab rate system. You directly have to calculate the surcharge on the entire tax. Okay. Then if total income is above 50 lakhs up to 1 crore, the surcharge rate is 10%. Total income above 1 crore up to 2 crores, surcharge is 15%. Total income above 2 crores up to 5 crores, 25%. Above 5 crores, how much? 37% surcharge. Then in case of partnership firm, LLP, local authority, if total income is above 1 crore, directly 12% surcharge. Only one limit. Next, in case of domestic company and cooperative society, If total income is above 1 crore up to 10 crores, 7%. Total income above 10 crores, 12% surcharge. Then, in case of foreign company, if the total income is above 1 crore but up to 10 crores, only 2% surcharge. Above 10 crores, only 5% surcharge. The surcharge rate is so low because the tax rate is already high. Next, special income under section 115 BBE. So under 115 BBE, the income is taxed at how much? 60% and the surcharge rate is 25%. Now let's come to rebate. Rebate under section 87A is allowed in the normal provision only if 3 conditions are satisfied. What are the 3 conditions? The assessee should be a resident, assessee should be the individual, and the total income should be up to 5 lakh rupees. If all the 3 conditions are satisfied, then the total tax up to rupees 12,500 will be given as rebate. Rebate means what? Rebate means a discount given under the Income Tax Act. However, be very careful that entire tax is not allowed as rebate. Up to how much allowed as rebate? 12,500. Because if there is a special rate of tax, then sometimes the tax can go to more than 12,500 also. In such case, what you have to do? Just reduce 12,500. Balance amount will be the tax payable, and based on that you can calculate health and education cess and complete the answer. Next, what is marginal? Okay, health and education cess. Health and education cess is 4% of income tax plus surcharge. So you have to add both income tax and surcharge, you have to add, and on this figure you have to calculate 4% health and education cess. Sir, what is cess? Cess is nothing but a tax that is collected for specific purpose. So this tax, that is health and education cess, is specifically collected for health and education. Now let's come to marginal relief. Why does marginal relief come? Marginal relief comes when the additional tax is sometimes more than the additional income. Okay? Why does this happen? Because surcharge does not follow slab rate system, it follows direct rate system. That is why there is marginal relief concept. So sometimes what happens, if you go from a slab of one surcharge to another surcharge, then sometimes your income might be only a little bit additional. However, your tax might be huge because of a small addition in income. In such case, the Income Tax Act tells that the additional tax should be restricted to the additional income. Okay, so after restricting whatever excess taxes there, that will be allowed as discount or marginal relief. Now how to calculate the marginal relief? Marginal relief means actual tax minus tax on limit minus total income above the limit. So if suppose income is coming as 1 crore 1 lakh, it means what? Actual tax will be the tax on 1 crore 1 lakh. Then limit tax will be the tax on the limit, that is surcharge limit, which is nearby 1 crore 1 lakh. What is nearby 1 crore 1 lakh? Limit is 1 crore. So tax on 1 crore minus total income above the limit. So what is the total income above the limit of 1 crore? That is 1 lakh rupees. So actual tax minus tax on limit of surcharge minus total income above the limit. And lastly, rounding off concept. Rounding off of income should be done to the nearest multiple of 10, and the final tax should also be rounded off to the nearest multiple of 10. Fine. There is special surcharge also, special rates of tax also, that we will discuss as and when we are studying those chapters later on. And at the end we will revise it again, once again.